Good morning, everybody. Oh, countdown begins. Feeds are firing up. All right. Well, good morning, everybody. Special edition Saturday show. We had a busy week this week. This show, we're going to continue the Mastering the Basics series at the time of the year where we have time to work on our businesses quite a bit. This show is the sixth show in the Mastering the Basics series, all the steps to professionalization. This is typically one of the most popular shows because it deals with something all of us struggle with. Some of us hate to do, but know we have to do. But it is the secret to all business, which is this the financial side. And we go deep into job costing on this. And I share my most popular template at the end of this one. I give you my email address and I send you my job costing template. There's goal tracking templates, there's all sorts of other stuff with there. Also, I am here to answer any of your questions. It can be dealing with job costing, it can be dealing with profit and loss statements, financials, anything. I love going deep into this stuff. I feel that this is the science of running a business. But before we jump into that, folks, just happy Saturday. I appreciate everybody watching here. I like to do my shows during the week to protect my Saturday mornings. We had a busy week. I want to get to it with you guys here on this Saturday morning. Grist Paint. I've watched most of these, but I'd like to review them. Are they archived? Yes, they are. If you search, Facebook is the main archive. YouTube, Instagram is another archive. Every single show is on Facebook right now. We're actually going through an archiving project. I have a college intern going through 9 years of shows, archiving them all, and we will be releasing them on Spotify, which they don't exist on right now. And we will be reviewing the 9-year history on YouTube, filling them all in and cataloging them. There will also be a standalone website to help you search all the shows and things like that. That's a big 2025 goal. We'll get to that. Right now, you can search for every single Ask a Painter live show on the Ask a Painter Live Facebook group. Ask a Painter Live Facebook page. Where I broadcast live this from, go to that page and you'll find it. So, all right, everybody, before we get into this stuff, again, here to answer any of your questions here. We have all the events from 2025 released from the PCA. So you see down here in the show notes on Facebook and eventually Instagram, you're going to see all the events. We have Craftsmanship coming up in spring. We have PCA in Espanol, residential, women in paint, commercial, and of course the big Expo here. So there are discounts for members. There's discounts for early registration. I would double up on those. I would get going and let's see you guys at some events here because this information is great. Connecting virtually is great. It's one step above just friending somebody online. The next step is being in person with them. And that's the big boy. So, all right, everybody, there will be links in there to all of our events. Also, we are working through the Mastering the Basics series. So we started off many weeks ago with proven process, SOP. Then we went to estimating. Then we went to production process, which is a new show this year. Then we went to marketing, which is one of the most popular shows of the year because of the need for marketing all of a sudden. We have human resources standards and deliverables, which we did last week. And now we are on to financials and goal tracking. That's a big one. We only have a couple shows left. We have the leadership portion, the LMA, the lead manage and accountability portion. Then we have the personal development side. We're going to wrap up the Mastering the Basics series. Then we're going to get into the regular series of shows where we have guests. We do the craft, we do entrepreneurship, we do self-development, all that stuff. And we'll have great branded shows and we'll much more variety than the Mastering the Basics stuff. So really looking forward to jumping in with all of you guys. I will send you this document. And when you see these links here, you can actually click these hyperlinks and they'll take you to all the shows where we have Mastering the Basics. So this is like the Wikipedia, the encyclopedia for what we do right here. And happy to have you guys follow along. Get all your questions, get all your comments here in real time. We got plenty of people watching. One quick ask before we jump into the actual show here today is share this in your story, share this in your feed, share this wherever you can, start tag people. Thank you guys so much. I look forward to this show every single year. No show generates more responses than this show. I send out more templates than any other show. I'm going to give you a job costing template that I have massaged over a decade. That is beautiful. It's simple, and it's a secret to running your business. So I present to you guys Mastering the Basics, show number 6 for 2025 in this series, Financials, a mini master's class. At the end, I will give you my email address and I will send you all of my templates. So there's a thing that I have coined the December-February paradox. So Typically, what happens in December of every year, people are sitting here crushing it, killing it, 10x, everything's going awesome. Then something interesting happens in February, right? You get some of these things online. We're in all the painters' Facebook groups talking about our growth, how we're crushing things, we're killing it, we're 10x and everything. And then all of a sudden, come February, you see the same people having existential crises. Oh, what am I doing? I'm not making any money. Nothing worked out well. Do you want to know why? It's because of a thing called taxes, right? So most people do not track their financials during the year to know how they're doing. So it's a feelings based thing. We're crushing it, right? And you might be, but you don't know. In February, when you're forced to do your financials by the federal government for your tax purposes and turn them in, you have to reconcile your real numbers, right? Now, tax accounting, which we're going to get into later, is not internal managerial accounting. It's not job costing, right? It's another completely different form of accounting. If you just file your taxes and look at that number, that's not exactly what you made this year. There's depreciation, there's amortization, there's puts and there's takes, there's credits, and there's all sorts of other stuff like that. That is not the final arbiter. You cannot rely on your tax accountant to tell you if you made money last year. You need internal metrics to do that, right? And then you race to get your income low on there if you want to have a less tax burden. But the December February paradox is people believe they're crushing it at the end of the year. When they file their taxes, they actually find out, well, maybe some things didn't go right, or they're using that number as a barometer of how their business is doing, which isn't always great. Here's typically how things work. We haven't revisited the transition curve in quite a while, but it's a thing that has really put data to my feelings over the years, which is on a simple thing. This is how we think about business decisions, personal decisions. This is the arc, the mental gymnastics that we do through a decision here. So typically, just take like starting a painting business, right? We're starting on the left-hand side of this curve. Your uninformed optimism. You are stupid and you are happy. I'm going to start a business. Everybody who starts these businesses makes a lot of money. This is going to be great. I can't wait. You start riding up that transition curve, and pretty soon you gather some data. You are informed pessimist. You're smart, and it makes you a little sad because maybe things aren't working as well as you want, or some things need improvement, right? So then you start riding down this curve of sadness and despair, right? And then pretty soon, maybe multiple times in the course of your professional career, I've experienced this, you come down to a crisis of meaning where things are like, the data is pointing that things have to change. Maybe you're changing things. Maybe the numbers aren't following along, and you're like, wait a second, I thought this was supposed to work. And then you all of a sudden you have this like crisis of meaning, like nothing makes sense. I don't know what I'm doing. The numbers should be following. And then typically you have two paths. You have crash and burn. If you give up, you don't have the grit to keep going, or the mental fortitude to actually fix it. Or you ride it back up in form pessimism. So you start off most journeys being stupid and happy. If you do things right, you'll be smart and happy at the end of it because you have the data and the feelings. And that's what this show is all about. We already have the feelings, right? We already have the feelings. The majority, well over 90% of painting businesses in the United States, and even all businesses, run on feelings, right? You have a happy client, you make a beautiful paint finish, you get paid for it. This is great. It's a win. But did you actually make money? It's a harder question to answer than you would think. So here we go. Are you experiencing any of these problems, right? Do you have problems scheduling, estimating? What do you charge for X, right? When to hire somebody? What is good? What is fast? And what is the earning potential for something like this? All of these things can be answered with a base of job costing. Job costing is the magic little algorithm, magic financial that all businesses use. It is not this secret. It is not something specific to the painting industry or to me. This is what all businesses do. It's tracking material and labor at a benchmark. Those are your big variable costs, which we'll get into later. And those are the things that start making sure that you can run a successful business. So let's talk about some data and some feelings for the sake of good decisions, right? We have data. There is some mediocre data though, right? Just because you balance a checkbook, just because you pay your taxes, just because you pay your monthly bills, you are not a financial whiz. Those are things you have to do no matter what. But all of those, if you take each one of those things, that doesn't necessarily tell you if you're doing well in the business, or if your painters are being productive, or if you're overbuying paint and things like that. Those are things that are kind of there that you're forced to do, but don't necessarily they're not called managerial accounting. They're not things where you put numbers together to actually make good decisions. Better data inside your company is job costing, benchmarks, and then some goal tracking, and of course the P&L, right? We always have the feelings, right? The feelings of a happy client. Your people might even be happy. You sell a huge project, right? Or worst case scenario, it doesn't always have to be good. You can get feedback from a client. You go do an estimate. Actually, I just saw a Slack message from one of my team that said we turned in an estimate for a project, and the feedback was every single one of the estimates was three times less than the one we turned in. Here's the deal. We're not crying over spilled milk. We know what it takes to run a professional company. We know how many hours is in the business. If somebody can do that for three times as less, good luck. You can have that job and you can suffer through it and you can figure it out. If you have job costing, if you have a profit and loss statement, if you track these things, you will actually solve the eternal question of what do you charge for X, and be solid in your answer. Be confident in your answer that we're going to lose some. If somebody else out there, it's winter in Minnesota. If somebody else really needs that and they underbid or they don't know what they're doing, or they get desperate and don't charge enough, they can have it. They can dig out of that hole. I did that for years, right? And I used my extra labor to make up for it. And I don't want to live a life like that. And that's why the industry stats for our industry are that painting businesses typically go out of business in 18 months, right? Because they do stuff like that. So job costing will tell you how to stay in business for longer than 18 months. So now we want good decisions, right? Are we profitable? Are we estimating the correct price? Are our project budgets? We got to tell the painters how many hours a project takes. That all comes from that. Scheduling can actually be solved with a lot of job costing. Company budget. So what are we going to spend on advertising, office, vehicles, things like that? Your leadership team. That can all be devised from job costing. Incentivizing employees. Every single one of our employees' comp plan is tied to the outcome of job costing, the actual profitability, not effort, it's outcome, right? This is a meritocracy. Reviewing employees, that's a big part of goal and comp plans. Hiring and training, same thing. Our job costing is based on that. We can track a human's experience in our company and their progress based on the job costing of their projects, which is a pretty cool thing. So types of accounting, I want to level the field. So I went to college for business. I have a bachelor's degree with a double minor in two forms of accounting. The two forms of accounting that I deal in mostly, tax accounting and managerial accounting. Tax accounting is something external that the federal government runs through an algorithm. It does not tell you if you made money or not accurately, right? Managerial accounting is all the things you do inside the company. So think about like your book, think about like job costing, think about some of your goal tracking, even your P&L. P&L would kind of be a hybrid. If you do this right, excuse me. It's taken me about 3 years to craft a profit and loss statement that I can actually query for managerial stuff. The biggest problem I see painting companies do is they hire an accountant, they let that accountant craft their profit and loss statement. We'll go deep dive into this later. They craft the profit and loss statement for the accountant's use and not yours. You can craft a profit and loss statement just by categorizing your expenses differently and your revenue differently, so that when you do a search on QuickBooks for a monthly profit and loss statement, you can actually use it for managerial. It's not just good for your accountant, but it takes a long time and most accountants don't want to do this. So you kind of have to like walk them through the process. And then the biggest part of this whole thing is holding them accountable to it. So we're going to start with a couple things. We're going to start with some industry benchmarks. We're going to talk about job costing. Then we're going to talk about goal tracking and then profit and loss today. Industry benchmarks, where to start. Let's talk about some generally approved, generally abided by standards in the industry. This will vary slightly by your business size, but it's a great place to start. So these are the commonly accepted industry benchmarks for our industry, for a service company like ours. We're looking at variable cost and fixed cost. You can see here my cursor. Yep, you can see it. There are two parts to your basic profit and loss statement right here. You have variable costs up here above gross profit and including gross profit, and you have fixed costs down below. People call these a lot of things. The technical accounting term is variable cost and fixed costs. The variable costs up here vary based on if you have business or not. So think about if you have a paint job, you will have labor and paint. If you don't have a paint job, you will not have a labor expense or a paint expense. Variable expenses go up and down with the amount of work that you have. Fixed, magically, by their name, are fixed. This is your overhead. So whether you have work or not, you're paying for your vehicles, you're paying for your shop, you're paying for your insurance and things like that. And so you really want to be careful about categorizing those things, because when we talk about job costing, we talk about variable costs only. All we're doing is tracking the big inputs into what creates revenue. So material and labor, right? And in our business, it's actually pretty simple. There's labor and there's kind of paint. Well, sundries in there, but it's typically less than 1%. So when I talk about job costing, you can see how I segmented this out. We're really talking about this. And then people start talking about, well, in your job costing, do we track advertising? No. Do we track the shop expense? No, that's not the purpose of job costing. Job costing is figuring out the cost for each job, right? So let's get into that job costing. Oh, I should say, there are some commonly accepted industry benchmarks here. Typically, material and labor, 15%, no more than 15% for material, and no more than 40% for labor, which taken out of 100% will give you 45% gross profit. Some people put it at 40, some people put it at 50. Internally in my company, we pick 45. I feel it's fair to our painters. We can charge a good price. It's high enough where the company can make money, but it's not so high that people's comp plans don't get dinged because of it. So it's a nice common ground like that. The bigger the company is, typically the lower the gross profit goal is, and the lower the net profit goal is, give or take. So job costing, this is the magic data, folks. This is the thing that I like so much. We spend a great deal of time in my company doing some very simple thing like tracking material and labor so that we can make good decisions, right? So basic job costing are the benchmarks. So again, you got paint as a percentage of revenue. We don't want that to go over 15%, give or take. Labor as a percentage of revenue, we don't typically want to go over 40%, right? And this changes with subs versus W-2s and all this other stuff. But generally, a job in my company, if it hits 45% gross profit, will be a win for our painters, and it'll be commissionable and bonusable for our leadership team. So yeah, that's basically what we're looking at for basic industry benchmarks, right? So where do we gather all this magic data from? So again, surprise, surprise, all this stuff exists in your business right now. You just have to put it together in one single source of truth and organize it in a way where you can make good decisions. And that's what we're going to talk about job costing today. So here's a screenshot of one of my invoices. Your revenue comes from an invoice, right? Your material cost comes from your paint invoices. These are things you interact with and pay with. And then there's the labor cost, the actual payroll for your company. Now, if it's just you as a solo painter, I typically assign at least $30, maybe even $40 of payroll an hour for the owner operator to paint, because they're typically way more productive than the average W-2 painter, give or take. Now, this is something that I did not do early on that I stumbled across that is a huge fault in most people's job costing. There's a thing called labor burden, right? One of the biggest oversights in our industry. My template automatically calculates this in here. So labor burden is the cost of employing a W-2 employee, right? Now, if you have subcontractors, there'll probably be a little bit of insurance, but you don't pay employment and taxes on subcontractors, right? Oh, and I will also say, email address coming at the end of this, folks. I will send you all my templates. Also, if you guys have any questions about any of this stuff, let me have it here. We got a quiet crowd. We got tons of people watching, but we got a little bit of a quiet crowd this morning. So wondering if everybody's still waking up, having that first cup of coffee here. So you guys don't want to talk about job costing and benchmarks and profit and loss statements at 8 in the morning on a Saturday? Huh. Okay. It costs about 25% more than you think for payroll for somebody. And this can be taken into, there's many things that go into this. It's going to vary a little bit by state, but not much, folks, not much. FUTA, federal unemployment, state unemployment, FICA, Social Security, Medicare, federal, I forgot what FIT stands for. God, this has been so long. Federal, state unemployment insurance, and then work comp as well too. All this stuff gets tagged on here. All this stuff will show up in your people's actual paychecks, but we have to account for it. Now, here's the deal. When you have somebody that you pay $18 an hour, give or take, they work 40 hours a week. That will, most people think that's $720 worth of payroll right there. But the problem is you need to take into account the 25% labor burden. That actually puts you at $900. So the biggest problem with all this stuff is over the course of a year, your labor could be 25% off, which means you're going to bonus the hell out of all your people for jobs that don't actually deserve it, or your projections. You're going to be crushing at 10x and baby, but if you don't take into account labor burden for employees, it's going to be a big problem. All your job costing is going to be off, and that's kind of what all this is about here. So if you think about it, I calculated this stuff. I actually wanted a benchmark. So for 2 years, every single week, I calculated FICA, Social Security, Medicare, FIT, SIT, FUTA, SUTA, SUI, all that other stuff, work comp. And it turns out that you can see this is actually from one of my weeks sort of things here from a few years ago. I calculated it and it was literally plus or minus 1%, 25% every single week. So instead of trying to calculate, is it 24.2? Is it 26.1, things like that? I just put all my stuff I add an automatic 25% labor burden to my job costing. You can check it with your actual payroll. This stuff does exist, folks. And in my payroll, it actually gives you the wages paid and then the burden on there, all the taxes and stuff too. So I can actually check that every week and do that. Oh, we got a couple questions here. Pete Wieslow. Oh, my friend Pete. I'm actually job costing and reviewing sales numbers for the week as I watch. Great way to start a Saturday morning, right? Shelton, 6:30 here. Just want to listen. Very informative. You got it. And I know that 2 hours plus or minus. We're starting at about 8:30, 8:30 here. Some people are going to be 6:30. Some people are going to be 10:30. AJW from across the pond. Paint is going on. Listening to Nick Slavic. Thanks much, man. Matt Hyde. Hey, Nick, do you use QuickBooks, project tracking, or track through to a spreadsheet? No. So we do use QuickBooks. I use it for my P&L, but I don't use it for job costing. We made our own spreadsheet because I use it as a pseudo CRM to query my stuff and check my job prices. So one of the benefits of my job costing template is that we have enough data in there and it's a spreadsheet where you can query by column and you can say, show me the subcontracting job, show me the exterior job, show me the jobs where Tate the painter was on, show me the job where Hayden the painter was on. And I use it for all of that internal querying. And I can figure out for decks that were less than $1,500, how did we do? For extra large houses that were more than $13,000, how did we do on those things? And that's kind of how I use my job costing spreadsheet for all that stuff as well too. Efren, great job. I'll be speaking about this in Spanish at the SW Pro Show in Chicago. See you there. Hey, man. Efren, we'll see you there. I'll be presenting on some marketing and on some estimating stuff there as well. Cannot wait to do that with you. That's going to be absolutely awesome. So, all right, folks, off from labor burden onto my job costing template here. Oop, go back one here. Go back. All right, so this is the actual template that I'm going to send you guys, and I'm going to walk through these things step by step here. It's basically a way of tracking your material and labor per job, and I have a whole bunch of conditional formatting, so you can see the green and the red cells. Green automatically shows you we hit the internal benchmark. Red, we did not. So parts of the job costing template. You can see the yellow part here. This is the project information, and we've added to this in the year. So every year when I send out my templates, it's a little bit different every time. So Professional Painters Inc., listening from the Bahamas, absolutely love that. I'd love to see a picture of one of your job sites, or if you're on vacation, picture from there as well too. We basically get the project name. We get the source of the project right here. This is for marketing, folks. Remember, we have the email of the client, the address of the client, the phone of the client. We have a check mark whether it's exterior or not. We have, if there's a subcontractor, we list the subcontractor. We have the estimator and the project manager so that you can sort this entire sheet by which estimator it is. And that's how we figure out their commissions, give or take. Then there's some squares right here. There's 4 squares: gross profit, material, labor, and revenue per hour that automatically calculate for you, and they're conditionally formatted. You have to enter the revenue from the job. This is the amount you invoiced for them. There's a project budget. I have a whole slide on this later. This is a little added benefit of my sheet. There's actually a benefit for the painters in there as well too. We calculate the hours that this project needs to get done to produce $75 of revenue an hour. And then this conditionally formats red or green if the painters hit the budget or did not hit the budget. Then there is the magic part where we have to get all the data correct. This is the material portion right here, the orange, where we enter in the type of paint we used, how many gallons, and then the cost of that, total cost. And one of the biggest problems I see is that when you ask your paint rep for a quote on a price for a gallon of paint, they are not going to include all the taxes. This is the materials burden, right? In Minnesota, we have a thing called paint care as well. We're taxed a couple bucks a gallon to buy this paint so that we can recycle it and recycling fees after. And basically what I do is my paint rep gives me all my spec'd prices for the year. And then I go to my paint store and I have them pseudo ring up a gallon of every single one of those. And I put the actual cost with the purchase burden of materials in there. And that's how we actually figure out the actual cost of materials. not just the quoted price, the shelf price of materials. The pink is the labor. We either put in the amount we pay the subcontractor, which is easy, just enter the number. That's your total labor. Or I actually have a drop-down menu that you can connect where you click the name of your painter. It shows their automatic wage, how many hours they worked, and then it all feeds into the conditional formatting here. So the spreadsheet I'm going to send you is very straightforward. And as always, you have my email address and happy to work through it with you. So I want to talk about project budgets because when I send out my job costing template, typically the biggest questions I have are what the hell is a budget and how is this calculated? It's already calculated in there for you. If you type in the revenue of the project, it'll tell you how many hours your painters have to get that done if you want to produce $75 revenue an hour. You can change that, obviously. But here's an example. We have a $27,955 project. The estimated materials, we drop out materials, right? Because the painters don't get the budget for materials in their labor. So we drop out materials, but we don't know how much materials we're going to use yet. So we drop out the maximum, 15%. I don't want to exceed that. So we take out $4,193 in that. And then we divide by 40%, which will give us $11,1822. We divide by $75 an hour, which will tell us on a $27,955 project, the painters have 316.8 hours to get this done if we want to produce $75 revenue an hour. This is the formula. It's basically revenue minus materials divided by the amount of, labor, whatever you want to make. If you want to make $150 an hour, you divide by 150. If you want to make 55, you divide by 55. I would urge you never go lower than 75 with employees, but that's just an internal benchmark for me. So now, after job costing, let's start talking about goal tracking. So goal tracking is, at its simplest form, if you're doing multiple jobs every week, it's taking all of those jobs and their job costing and then putting them together in a 1 week time frame, saying, when you put all this stuff together, what does it look like? You can look at the individual job, that's fine. But now when you put it together, how are we performing as a unit, as an organism, right? So current process, you want some SMART goals, right? So the data that we need are, production capacity, historic revenue timing, sales capacity, project management capacity, marketing data, all that stuff already exists in your company. It's just the people who can put that stuff together is a really good thing. So when we think about goal tracking, I think about it at a minimum of a week, obviously month, quarter, and then year. All put that together. We want to combine all that stuff to see the health of the company, not just looking at individual jobs, right? So initially, what you're seeing here is a week by week graph from a couple of years ago of how I produce revenue, and it felt like a heart rate monitor. Like, oh my God, we're up, we're down, we're up, we're down, we're up, we're down. It's just a lot like that. But I wanted to get a feel for what the company was producing and what we should expect every week, right? One of the outcomes of goal tracking like this is to say, in the third week of February, historically, what percentage of the year's revenue have we produced then? So you can actually set a SMART goal for your people instead of just saying we're a $3 million company divided by 52 weeks. We need to make this much per week. You know damn well you're not making that same amount of revenue the third week in January as you are the third week in August. And if you lay that goal on your people, that simple dumb goal of the revenue you want to make divided by 52 weeks a year, you're going to be off all the time. So SMART goals and the evolution of the goal tracking and this job costing will teach you that. And I'll show you my exact method here in a little bit, but you can actually say in the third week of February, historically, not how much revenue, you can find that too, but what percentage of our revenue. So if you want to increase the company from 3 million to 4.5, that percentage will stay the same. And you could say, well, we still want to get X, we still want to get 7% of our revenue in the third week of December, give or take. That's how it works. So I tracked it micro by the week, and it was hard to find trends there. But eventually, when you trust your data on the micro level, you can then move it out to the macro. And what you're seeing are my colorful charts year by year of how we produce revenue for the last 4 to 5 years, give or take. And now, when you look at those graphs, I aggregate it by month, and the craziness, the heart rate monitor thing goes away, and you see a much easier trend line. But you have to sometimes zoom into that micro to make sure that you can trust the data, so that when you go out, then you can start seeing better trend lines like that. But I actually suffered from probably zooming in too much for too long. And I had to actually take a step back and start tracking monthly so I wouldn't hyperfixate on a high or a low or things like that, because humans kind of do all sorts of weird stuff. So this year I've crafted my own operations dashboard in preparation for somebody potentially taking over operations of my business. and we track a whole bunch of fun stuff. But basically, this is my goal for how we're going to produce revenue this year. And then obviously we only have one data point for January so far, but February will be done. Yeah, today's the 1st of March. So Monday, I'll have the data point for revenue produced in February. And then we're going to have the blue line being what I predict, my predictions, and the red line then being what we actually did. And we're going to track that over the course of a year. And a whole bunch of inputs go into that, obviously, but that is my operations dashboard. So now we can aggregate some things to see how we're doing on a weekly basis. We can aggregate things to see monthly and maybe even a year, right? We have this job costing. We can do some predictions over a long time horizon, and that'll help us do a little better planning for our business. Now, the profit and loss statement, typically this has to be generated and it's generated for taxes. So people think, oh yeah, I got a good handle on financials. My accountant does my profit and loss statement and I file my taxes. You got to be really careful with this one, folks. If you send me your P&L and say, Nick, how am I doing? I'll say, I'm going to have to rework this entire thing. And typically it's not, I have to take out just the tax things. Typically there's expenses and revenue not calculated correctly. It's all over the place. And you can't actually tell how much your labor and material was. And I'll show you an example of mine, how I've crafted this hardcore over years. Your profit and loss statement is the combination of the variable and fixed expenses, right? So you have the job costing, the variable, you have the material, you have the labor, you have the gross profit, and now your P&L also takes into account the fixed expenses or the overhead of your business. So types of accounting, remember this from the first one. We have the external, we have bookkeeping and tax accounting. Internal, we have the managerial, which is the job costing and the weekly goal tracking. The P&L can sometimes be a hybrid of this, right? I have forced it to be a hybrid because I'm a utilitarian. If you just let your accountant do your P&L, it's not going to be useful to you at all. It might be useful for doing taxes, but if you have a mentor or a coach, or you ask me questions about your business, I'll ask to see this with your blessing and confidentiality. And honestly, there's a lot of times where I tell people to send it to me in a spreadsheet, and it takes me about 20 minutes to move all the categories around to try to figure out what the hell's going on, because things are just way miscategorized. What you're seeing here is a snapshot of my P&L from last year. It's month by month. You can just do the yearly one too, but I like month by month, aggregating that data to see trends. And here's all the categories on the side. These are the things that you're going to have to work over really, really hard. You're going to have to craft this to absolutely work for your business and things like that. And again, we're looking at the benchmarks again. A profit loss statement is basically all the minutia that go into creating this. So we have fixed expenses, overhead. That is one line on a benchmarking sort of thing. We want to hit 30%, but overhead is basically 5/6 of the entire profit and loss statement down here. And it has taken me 3 years to craft this thing and find a accountant that will be amenable to me crafting it with them. So here's one excerpt from my P&L on the left-hand side here that shows you some of my categories. The yellow is the variable expenses, and this has taken me a long time to craft this so that it's useful for taxes and also managerial accounting. So what you'll see is income up here. There's job income. There's unapplied cash payments, which is an accounting thing. Nothing shows up there. That's just something that my accountant needs. And then other income. So you think about rebates from material, from manufacturers, credit card rebates, things like that. But really, I got everything in my 41,000 category right here, job income. 99% of it all shows up here. And when I do my P&L, I can drop out rebates, I can drop out incentives and all that other stuff. And it's all categorized in job income. Now, cost of goods sold contains typically material and labor. What I do is we have a material one, we have equipment rental, and then we have subcontractor labor. And then in the wages, this is all my W-2 stuff. We have main wages, payroll tax expenses, production wages, and then my simple plan like that, right? We also, in above, I have recruiting expenses because that is a labor sort of thing as well too. You could make an argument that should be an overhead, but for me, that is a direct cost of labor, give or take, and I like to include it in that. It's de minimis. It's not that much money every year. So basically, what we have there is we have income, we have wages, we have materials, and then we have cost of goods sold, which is all of that together, and then we have gross profit. Now, down below, one of the best things that I've done over the years is to categorize a lot of my overhead expenses so I can use them directly for managerial stuff. The best one that I do, and I think the best example, is advertising. So you can see there's a category called advertising and promotion, right? And in there, I have crafted basically, when you guys have my marketing template, I have like my 8 to 13 categories of marketing. I actually have all those expenses categorized here so that when I pull up my marketing plan and budget and template, I just go to my P&L, I do the monthly query on how much marketing expenses, and I can actually go to newspaper ad for January 2025, and it'll tell me that exact expense. And because my accountant put it in there. Typically, if you don't have these categories broke out, accountants don't want to get this minute. They're just going to throw it all in advertising, and you're going to have to comb through all your receipts. It's going to take a lot of time each month to then figure out your marketing, right? Which is the last template, or 2 templates ago, I sent that to you guys. So what I did was I said, well, great, but we're going to have some things automatically set up here where the expenses go into here so that when I pull this report up and I see my monthly P&L, I can take those expenses, copy and paste them right into my marketing template, and I can track cost per lead, cost per estimate, cost per completed job. This is harder than you think, right? You got to get an accountant to be open to changing this and getting it a little bit managerial. You got to get an accountant to classify everything right. And then you have to hold them accountable and verify it every month. So, go back one here. And finally, I'll open this up to any questions you guys have. But basically, at its end, when I look at everybody's profit and loss statement, when I look at everybody's job costing, I see one unique trend, which is everybody's worried about the wrong things. And I know why. Everybody is just up in arms about material and the price of paint and the price of putty knives and tape and all this other stuff, because we're forced to come to terms with it. We're forced to pay that bill. We see the retail price on the shelf. We see all that stuff all the time, and we have to pay those bills every month. Materials is typically 15% or less of a company's revenue, and labor, at best case scenario, is 40%. When I look into people's businesses, it's 50 to 60%, but yet nobody really focuses on labor because you have to track it. Also, it's tracking your own labor and applying accurate costs to it. It takes effort. You're forced to buy a gallon of paint and see the price. You're forced to pay your bills to your vendors, your coating suppliers. You are not necessarily forced to account for your own time. So people hyperfixate over paint. And if I had a wish for this industry, I would wish that you people would stop hyperfixating on the cost of paint, right? Just stop it. Everybody's business, when it goes out of business, is not because of the cost of paint. It's because of labor. It's always been labor. It always will be labor. So when you think about this, we're staring at the Sherwin-Williams clerk. I'll just use Sherwin-Williams because they're omnipresent. We're staring at a Sherwin-Williams clerk and we're saying, that's the guy that's keeping me from profitability. This evil corporation who supplies us with all this great paint, and Benjamin Moore and PPG and all these other people who supply us with all this paint. They're the devil. It's because we have to come into contact with that number. Most people don't want to come into contact with their labor, because then you would come across some pretty raw truths that you probably need to become a better painter. You probably need to become a more efficient painter. You probably need to manage your people better for efficiency. And you probably have to have higher standards, if we're being honest. And hyperfixating on the cost of paint is a fool's errand. It's a useful distraction if you don't actually want to run a good business. People always say, well, how do you track sundries? Where do you track sundries in your job costing templates? I don't even track them. It's way less than 1% of all my revenue. And if I had to track the amount of tape and patch and caulk and brushes and rollers and floor paper and stuff and 3M hand masker plastic we use, I would have to pay somebody $38,000 a year to track it all. And then I would still find out it's way less than 1%. It would cost me more to track it than it is to actually buy it. I similarly think that way about materials, which is I negotiate like a pirate with my vendors. I have a lot of purchasing power. I ask for some really good prices. I ask for some pretty amazing things as far as service goes. I set that. I be good to my vendors. And then I leave those prices, and then I spend all of my time every year focusing on labor. Labor is it, folks. If you get online and you keep complaining about the price increase that comes every year, you're a fool. I'm just going to be very honest. You should be increasing your prices at least once or twice a year. Because our vendors only increase their price 5% a year, we're pretty damn lucky. They could be going 10, 20, 30% a year, give or take, because where else are we going to go? There's only so many paint companies, right? So it makes me irrationally angry when I see painters get online complaining about Benjamin Moore, Sherwin-Williams, PPG, all these other paint brands increasing their prices every year. Oh, another price increase. Hey, dum-dums, you should be increasing your prices too every year, right? Because if you don't, if inflation is 7% and you keep your prices same year over year, that's a 7% discount, right? And in the years of inflation, if inflation was 7 to 9% and we got a 5% price increase on paint year over year, we're paying less, right? It's a pretty amazing thing. So I will say this, I hate to get spicy with everybody, but if I could have a wish granted for this industry, I would tell people and stop people from hyperfixating on the cost of paint. It is taking up all of your mental bandwidth. It's getting you emotionally excited, and it's not where all that time and energy should be spent. It should be taking care of your people and running a good financially sound business, right? So, hey, everybody, sorry, I don't mean to get sidelined on that, but everybody loves to talk about that stuff. And I know that really it's developing yourself, developing your people. You win with people. You don't win with a can of paint. We all buy the same paint. We all pay relatively the same price, plus or minus. And everybody hyperfixates on those things. Many of the things we don't control, like price increases, right? What we need to do is control the things we can control, our labor. That is the big thing. Overhead is something pretty easy too. Most of us unilaterally make decisions in the company. Don't buy a Ford Super Duty to run a painting company. You don't need a $110,000 truck, right? You can get by with a lot less. You can control your overhead. You can control your leadership team, your marketing, and all that other stuff. But labor is where we spend. I mean, it's literally your biggest expense. It's almost half of your expenses in a company. So, all right. Elder Alejandro Alegria. Hey, Nick, what about where a job needs a lot of sundries, for example, 15 cases of big stretch? Do we track that amount? Well, here's the deal. I don't track that amount at all. If we run into something unique where they need a ton of stuff, where we need a bunch of stucco patch, where it's unique to that job and it does actually make a difference, I will track that stuff. But typically what we find is that some jobs don't take hardly any sundries and some jobs take a lot. And in the end, it's way less than 1%. So yes, you're right. Some jobs take different, but what are you going to do about it? You're going to track it all, right? Here's the thing. If we have a job where 20% of the job is caulking, it'll be a line item on the estimate and we'll actually include those materials. If we need 20 cases of big stretch because a large portion of this job is caulking, then we will track it. That happens literally once a year out of 500 or 600 jobs my company does. So again, if I didn't track it, it wouldn't make a difference in the world. For that one job, maybe if it's a material thing. We include about 2 tubes of caulking, a thing of patch, a couple rolls of tape, a brush, a roller, a pan on every single job. That's included in our pricing model. If anything's above that and it's actually like de minimis is a accounting term for it. It's so small, it's not even worth tracking. It doesn't matter, right? If it's de minimis, if it is actually worth tracking, if you bought $1,000 worth of caulking on a job and a lot of the labor was used towards it, I definitely would track it like that. So Scott McDowell, so true. Paint materials are bottom of the list on cost. It's about labor, profit, and throughput. Absolutely. Matt Hyde, do you put project manager and estimator wages and cost of goods sold? I do not. So I used to, 5 years ago, I used to put project management and cost of goods sold because again, there'd be more or less based on that. But really, more accurately, I moved it all to overhead expense. And in fact, it's the first category of overhead under gross profit in my profit and loss, where I've actually crafted, I'll show you guys this here. Go back to the slide. When you see this right here, we have leadership team. We have it broken down by estimating, project management, and office coordination. So I can actually see what percentage of my revenue my estimating team was with bonuses and wages and benefits and all that other stuff. That's where I like to keep all the stuff in overhead. It's just a little bit cleaner, only because, I could make an argument for or against. And for years, I did put a little bit of project management up above into variable costs, but it is a lot cleaner and it's more commonly accepted that it would be in overhead. So Efren, how do you use tracking of labor to determine bonuses per job, monthly, quarter? Yeah. So 2 things, Efren. Job costing is how I determine my painters' outcome of their raises and how I determine all of my people's commissions and bonuses. So, everybody who gets a salary, a base salary plus a commission or a bonus has the same structure of a comp plan. They get a base salary, they get a huge package of benefits, and then they get commission. And the commission or bonus or whatever you guys want to call it is a certain percentage of the revenue of the gross profit of all jobs that hit 45% or better. So, on my job costing sheet, Da, 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 da. Let's get back to one of those bad boys. Job costing. So on my job costing sheet, what we do is I go by estimator. So we can see, oh, where's my estimator? Estimator here. I'll go on that column right here and I'll sort A to Z and it'll sort between Ian and Tom. And then I take those, I copy and paste into separate spreadsheets. And then I'll say within Ian, I go to the gross profit tab, sort by gross profit, and it'll sort it from the highest gross profit to the least gross profit. And then basically I draw a line at 45 and then I add up the revenue from all the ones that hit 45 or better, and they get a certain percentage of that revenue every single quarter. For my painters, we deal with the budget because gross profit is reactionary. It's after the job. So I can't tell painters, get out there and work as hard as you can. I'll tell you if you did well or not. We actually need a goal for them. And that's what good bosses do. So we do the hourly budget. So you'll see on here, we have the hourly budget and then if they hit it or not, right? And the percentage that they go over or under, give or take. So on an hourly budget, we calculate, we minus out materials from revenue. We tell them how many hours a job is going to take. We tell them, and then we get it all entered in there to actual. Now, when I see if my painters are eligible for a pay raise, I will basically take a quarter's worth of job costing, sort it by them. I'll say, show me all the jobs that Alex was on, and then I'll sort the jobs by hit the budget or didn't. And 75% of those jobs need to hit that budget in order to be eligible for a raise. That's how we do it. Oh, lots of questions coming in now. So I'll hammer through a few of these. Jordan Huff, how do you factor in callbacks for profits in jobs? We are having troubles incentivizing employees not only to hit the allocating time for a job, but also no callbacks. Here's the deal, man. I used to track callbacks. It's actually a column on here that I deleted because I cannot statistically get it lower than about 3 to 5% on any job. But here's the deal. If there's a callback, we just track those hours. It goes back on there. The job is done. We have all our job costing done. Hey, they did really good. Painters are eligible for a raise. Project managers and estimators are good for a bonus because we went over 45%. Now, if we have to go back a month later, I just keep adding those hours in. So if we have to go back 6 times, and I'll give them a report, we'll go through the job costing. Every time we touch that job, we got to add in those hours to it. So that's how we do that. I have found that irrationally, I tried to eliminate callbacks for my people. And it's not from telling people not to have callbacks. It's not even incentivizing them. It's training them in a standard operating procedure. Remember, mastering the basics show number 1. It's a standard operating procedure that's written down, it's trained to, and it's held accountable. And magically, the callbacks start falling off a cliff. If project managers do their job, estimators do their job, following their SOPs, painters follow the SOPs. And in the end, what's interesting is that if we have 3 to 5% callbacks this year, it'll all basically because a couple little simple mistakes. We left a screwdriver on site. There's a speck of paint on a floor that's easy to fix. But a lot of it's just caused by the client. Clients will just subjectively have things be callbacks. And sometimes it's worthy of a callback and sometimes it's not. And so honestly, I can't eliminate that because my clients' personalities are so all over the place that I can't standardize them and their emotions and what they consider a good job and bad job. We can put it in our contract. We can tell them what it's going to be. But some clients, man, you could do work that you're not as proud of as you could be, and it's fine with them. And sometimes you could do world-class work and it's still not good enough for clients. And we can't control that stuff. So we just react to it as we can. Todd Hill, how would you categorize going to Colorado elk hunt? Oh, there's material and labor in that for sure. Pete Wieslow, when you are going to have to rent equipment for a job, how do you estimate for that? Do you mark up off actual in your calc? Yeah, so here's the deal. I've never really found a way that I felt comfortable figuring out rental equipment. So one thing that I do with rental equipment in a job, we're doing a commercial job right now where we have it, and it really messes up the job costing because my benchmarks and my job costing are based on paint and labor. and not that. So what I found is that an interesting thing, if we have a $2,500 lift cost on a job, if I just add $2,500 to the invoice and then add a $2,500 expense, it actually hurts the overall gross profit because you're adding to the revenue and adding to the expenses. You're adding a 1-to-1. One revenue, one expense, and a ratio of 1-to-1. So it actually will take your gross profit down. So in the end, what I do, I make sure we charge for it on the thing. I don't try to mark it up because we would have to mark it up a lot, right? And I typically don't like making money off simple things like rental equipment. I would like to make it off of labor. So what I actually do in my job costing is I track the rental cost, but I don't put it into job costing. We'll have it as a line item, but it won't do that because I would have to change what constitutes a benchmark for gross profit, material, and labor based on that one job. I don't feel like we could come up with another benchmark for that. I just feel like I'm just going to drop it out. As long as that stuff is paid for by the client and it's not costing me money, I drop that out. Now, if it was a regular expense, if I ran industrial crews and we literally needed two articulated boom lifts on every job, we would absolutely have a different benchmark. In fact, materials would probably end up going from 15% to 20% allowance. And I would probably want labor to allocate differently too. We would just have a little different thing because my benchmarks are based on paint and a little bit of sundries, not rental equipment. And we would just change that a little bit. So it doesn't happen that much in my company. But yeah, we basically just, I on a one-off basis, I drop the rental equipment off of job costing as long as I know it's being paid for in the invoice. So, all right, folks. Well, it is Saturday. I'm taking my daughter and my wife out to breakfast today. You guys have a great time. My email address is here. I'll send you benchmarks. I'll send you goal tracking. I'll send you job costing templates. Thank you, everybody, for watching. One final request: share this in your feeds. Share this with all of the people on your social media channels. Put this in the Painter Facebook groups. Tag somebody. Do something to get this thing out here. Spread the word of the show. I don't ask for much, folks. I give away all my resources. I just want to spread the word and maintain the influence that we have in the industry between the PCA and Ask a Painter. So, all right, everybody, have a great day. We will see you next week.